Happy Friday, IHMC friends and family. It's Shayan with Integrity Home Mortgage, and it's Friday before Memorial Day weekend, so I don't know if anyone's actually going to watch this, but nonetheless, I am back with your weekly mortgage market commentary. Markets are recovering a little bit today, but at the risk of stating the obvious, May has not been kind to interest rates. Since the last day of April, mortgage prices are down nearly 90 basis points, and 10-year Treasury yields are up about 34 basis points. Focusing in on this week's weakness started with Moody's downgrading of U.S. debt rating, which is a little more psychologically important than it is technically important. But we're ending the week here with budget and deficit concerns related to President Trump's big, beautiful bill, which narrowly passed the House yesterday and is now being worked over by the Senate. This week was very light on data, but that ramps up next week, despite the fact that we get a holiday shortened week. Two data points in particular to pay attention to. One is GDP, which is important, but a little less so than it was last month. Conventional wisdom has it that two consecutive negative GDP prints means that we are in a recession. Now, that's not actually true, but it's a rule of thumb that a lot of folks use. This week's reading will actually be our second look at Q1 GDP. So another negative reading won't mean that we are in a recession. And the data now is a little bit dated at this point, so it'll have a little bit less of an impact than last month's negative 0.3 or negative 0.3% reading. The other data point is core PCE, which is, of course, the inflation measure that the Fed pays the most attention to. This will be the last reading before the next Fed meeting, which will happen on June 18th. And not much has changed in terms of expectations since we discussed last week. A truce earlier this month in the trade war between Washington and Beijing was a positive, but today's newly proposed tariff increases on EU imports and on Apple specifically are moving things in the other direction. Markets continue to price in about 2 cuts for the year, which we continue to see as absolutely aspirational. Between the resilient job market and tariff impacts set to hit the numbers in the coming couple of months, it seems unlikely that there'll be a downturn in the data that would provide the Fed with an opportunity to cut rates, but anything's possible. That's all we got for this week. Hope you guys have a great long weekend and a meaningful Memorial Day. We'll see you next week.